Hey guys, so this is the video on market maker models. Now, what is a market maker model? Simply, market maker models are symmetric hedging program model where the market makers actively provides liquidity by buying and selling at the same time, in which the liquidity is reduced and the hedge is one entry, which offsets the opposing movements. Now, when we're looking up at the market maker models, we'll be looking for the two sides of the curve. One, which is the sell side of the curve, and second, which is the buy side of the curve. We will be selling till we are not meeting the smart money reversal criteria, right? We'll be talking about it, right? So now it is totally hedged, right? When we are looking up at sell side of the curve, we'll be selling, and when we are buying, we'll be looking up at this original consolidation, and there should be the high time frame PD array, right? We'll be talking more deeply with our theories, with the examples, right? So now these stages of market maker model. So there are 5 stages of market maker model. Original consolidation, and this stage acts as a drawn liquidity for price into target exit points for trades, right? And second stage is the accumulation phase, when price accumulates to take out liquidity or rate a point before expanding up from original consolidation in market maker sell model and down in market maker buy model, right? And the third stage is smart money reversal. This is when price reacts off a high time frame PD array. The smart money is a turtle slope entry, and then after there is a low risk buy and sell. Now in turtle slope, we'll be looking for SMT divergences, right? So the fourth stage is the distribution phase, where price expands back to original consolidation. Low risk buy and sales we are also formed during this stage, redistribution. The final stage, right? Redistribution of a market maker model. You want to see price complete the market maker model by either taking out the old highs or lows from the original consolidation, but it is not necessary to have do this all the time, right? Let's understand through this depiction. Now, when we're looking up at high time frames, right, you'll be finding only legs, right? 2 legs. The one leg swing high and going under internal value liquidity. Suppose this is a weekly chart and this is forward chart, right? Price would be just going like this, okay? And if you are actually going deeply into forward chart, you'll be looking up a very clear market maker model. But in weekly chart, they would be the only legs, right? Internal value liquidity has been taken out or filled up, right? And then external value liquidity, or external value liquidity and then internal value liquidity. So this is how it looks like in depiction. Let's go to the charts. We will be understanding it more deeply. Yeah guys, so if you're struggling in finding a best platform, then Funded Friends is best for you with low commissions and dry spreads with no time limits. You can be trading up to 200k of capital. Link is given in the bio. You can just go and you can join it. This is the XAUUSD weekly chart, right? So now our main focus should be internal value liquidity and external value liquidity, right? So this is the fair value gap. When price is touching the internal value liquidity, our focus would be this buy side liquidity. Why? Because this is the external value liquidity. And if you are not aware of internal and external value liquidity, then I've already created a video on it. You can be watching it on YouTube. So internal value liquidity and external. Let's go to the forward chart and see how it looks like. So this is how it looks like in forward chart, right? High time frame PD array, which is the fair value gap. And we got an original consolidation first, and then we should be having at least 2 of the accumulation phases, right? Took out the sell stops, and then we found a smart money divergence and a structure shifts. Now, if we are finding this, our focus should be on this original consolidation, right? Why? Because we'll be taking out in next. We'll be buying from that till original consolidation, right? So let's see. So now, that's how it looks like when we are actually focusing on buying. So this is the low risk buy when we are buying from this fair value gap, and then again distribution, again low risk buy, and then redistribution, taking out the internal value liquidity, external value liquidity, right? So that's how market maker models looks like. Okay, this is the part 1. We'll be making more videos on it. Thank you so much guys for watching it. Peace.